Welcome to Global One Media's Stocks to Watch. I'm Michael Swido. Today, we take a look at how analysts assess mining exploration companies, particularly those in the gold sector. This is going to be a masterclass. We have two gentlemen who spent a lot of time sorting through the numbers and talking to people in the field. Eric Wetterling is perhaps best known as the Hedgeless Horseman. He's an investor and edits a newsletter by that same name. Jon Feneck is a friend of the show. He's the head of the Feneck Consulting Group. Gentlemen, welcome to Stocks to Watch.
Thanks, Mike.
Thank you.
Jon, I want to start with how exploration projects are categorized. Analysts generally talk about tier 1, tier 2, tier 3, and sometimes even tier 4 companies, where tier 1 are the best projects, tier 2 contains significant finds, tier 3 are more risky, and tier 4 are probably not viable. I don't think there are universal criteria for these categories, but I'm wondering, what are the most common criteria? Can you give us a quick primer?
It's been a long time since I put my analyst hat on, but I would say that many of these companies, and I think Rick Rule and a lot of other industry experts would echo this, are never going to make it. So a lot of them, in my view, are, tier 4. And that's why you have to do the work to talk with management to understand what is the goal of this company and what, are you going to build it? Are you going to sell it? What is the timeline? I feel like when you look at a lot of presentation decks, there is no timeline that's clear to an investor. So it's very frustrating because if you're, going to produce in 5 to 7 years, you should have some sort of timeline in the presentation deck, in my view, to walk an investor through what you're doing with their money.
Yeah, definitely makes sense. You want to know when you're going to get a return back. And Eric, when investors assess a gold project, I think one of the first numbers they zoom in on is the amount of gold that's located there. I mean, that makes sense to me, but I'm wondering just how much gold needs to be present in your view for a project to be considered high potential?
I mean, that's a good question. And at the end of the day, the value of any mine or a deposit, a potential mine, comes down to economics. I mean, there's probably 1.5 million ounce gold deposits out there that are worth more than a 4 million ounce gold deposit, simply because you make a lot more margin on the lower tonnage, higher grade ounces in the smaller deposits. So I think as most things are in this sector, when you're an investor, it's more of an art than a science. But I mean, if you can get a decent margin deposit at 2-3 million ounces or higher than that, I mean, then it starts to really stand out. And then, of course, as always, comes down to infrastructure and all that. But I wouldn't say I don't have a single formula that this is what I need to see, but I prefer to, let's say, aim big. And in case you aim big, you could also maybe miss big and still, get something out of it. I want blue sky to be very large. So in case blue sky plays out, I can make a lot of money. And, if blue sky is high enough, even if you miss by 50%, that might end up being a mine, just not a world-class mine.
Okay, got it. So definitely aim high. Another factor that investors might consider is who owns the project and whether the biggest stakeholders include a major mining company or one of the smaller junior exploration ones. Jon, how important is this to you? Do you see more upside or a higher chance of success with one type of mining company versus another?
So if you look at Treasury Metals, which is TSRMF, recently they did a deal that brought in Mining Hall of Fame Frank Giustra to the mix. And that was important because they didn't really have a strategic investor before that. And so that brings in all of his followers, right? And that is accretive to the share price. If you look at the chart since the announcement, it's gone from about 14 cents US to about 16.5, but it popped higher than that. And there's positive news also in that part of Ontario just this week. So I think, some part of mining to me is luck. Part of it is strategy, of course. And in this case, I think Jeremy, the CEO, did a great job in attracting a big name to the project. One of the things that we look for, Michael, more so is having at least 30% of the flow tied up in good hands, because that will prevent a takeover, right? We're seeing a lot of take unders in the industry over the last couple of years, which is really, just frustrating as an investor. Marathon Gold comes to mind in November to sell the Caliber for pennies on the dollar. That's not what people are investing in this sector for.
Okay, so you want to see a mix perhaps of ownership And definitely, I mean, it sounds to me whether it's a major company or a minor company, they need to have sufficient resources to see it through. Is that fair to say?
Absolutely fair. Yeah. I mean, would love to see a strategic investor, but also would love not to see the company give it away, right? Because when you see too many 9.9% deals and the stock doesn't move, that's also telling you something that investors are now looking at it and saying, oh, okay, let me do the math on this. And I didn't realize that the company was only worth XYZ.
Hmm. I want to look at the price of gold now. It's shot up in March and April, but it's largely been hovering around the 2,300 level since then. Gold prices are up more than 20% over the past year. Eric, what implications does this have for the valuation and future prospects of gold exploration projects? Or more specifically, how do today's gold prices affect future gold valuations?
Take right now at $2,300 gold. I mean, on paper, almost every single project with a PEA out makes a lot of sense. Again, on paper, we haven't really seen the interest come back, which I think a lot of people expected we would see at $2,300 gold. But I take it as, I mean, I see some of the better projects out there, they are seeing money come in. What it means for the future and for gold exploration overall. I mean, in my opinion, I have to be a pessimist. It's like, again, if you look at any run-of-the-mill junior miner out there that's a developer, let's say, and has some kind of PA or economic study, right now they look absolutely insane. The problem, of course, is that this sector is cyclical. So it's like, for me, I don't look too much at the current price of gold. I want something that's going to work at much lower gold prices. Because, I mean, if you think of it like a business, you don't just want to make money in the 2 years that the gold price is up and then lose money in the 6 years when it's down. I mean, the major miners, a lot of them got burned when they bought a bunch of projects that worked at, the peaks of 2011. And then those assets became liabilities and almost took them under in the bear market bottom.
It makes sense. You got to look at different scenarios and whether a project's going to work at one price versus another, and you need to be conservative sometimes in those estimates. So, I mean, so that's price. If we look at the cost of mining, is there an average cost per ounce, Eric, for successfully pulling gold out of the ground, or perhaps you can give us a range?
Well, I mean, the best in the business, I guess that would be Agnico Eagle. They have an all-in sustaining cost of like $1,200 per gold, and then you have the Barricks and the Newmonts. I think last quarter they put up cost estimates of like $1,400 to $1,500 gold dollars per ounce. So I mean, I think those are kind of robust, given that the gold price is at 2,300. But yeah, I mean, there's a big difference between what works on paper and what doesn't work on paper. I know there's I think it was Rick Rule or Brent Cook, who are quite famous. They described that on paper, almost every project is expected to be in the bottom 10% of costs. And then you look at the actual mines out there. It's like, of course, no mine is that low of a cost. So again, it's like there's a bunch of stuff that makes sense or looks to make sense, but in reality it doesn't maybe make much sense. And then there's always a bunch of other shenanigans sometimes with like how mining companies calculate the cost, et cetera, et cetera. So I mean, I think it's a good start if you find something again that should work at much lower gold prices, because when I see the juniors right now, they put out PA studies and they use, let's say, $2,100 per gold and 5% discount rate, and they might be in very sketchy jurisdictions. Then I think you really have to think why they need to do that.
You mentioned shenanigans. John, do you have any tips for viewers to how to see through a shenanigan?
So most clients, of course, are not geologists, and you have to align yourself with someone like Eric or myself that does this full time. I mean, I don't think enough clients are thinking about paying for advice or just some type of guidance, and that's a mistake in this sector. This sector can really buck the most intelligent people. I've seen it happen over and over again over a long period of time. So, whether it's Eric or myself, you need to be paying someone for some help, right? Whether it's a newsletter or we have a real-time email update service, which I think is quite unique, where it's really driven by macro, Michael, where we on June 7th came out with a non-farm payroll read, 1 minute after it was released. And we said, this is going to be a really rough day because the headline number is about 100K jobs higher than the estimate. And gold and silver are not going to like this. And even though you look at long-term jobs, May over May being relatively flat year over year, the headline number has to be respected. And that's something that I think a lot of investors miss, is what drives sentiment in the sector, right? So we look at it as a process. You have to look at every key piece of information and put that into a thesis, because this is what the Fed is telling you they're doing.
All right, that's great. Looking at the macro, good point there. I want to look at the share prices of junior mining companies. They've been in a slump this year. And even for some stocks that have done well, there can still be a big gap between the company's market valuation and the value of its projects. Why is that, John? What are some of the factors that cause a company's valuation to lag so far behind?
A lot of intelligent investors even think that, when a good piece of news comes out, whether that's drill results or a JV, joint venture, or something like that, then the stock should immediately respond. That was sort of like 2020, where in the summer of 2020, all good news was getting bought. I think we're going back to that environment where a tide, a rising tide lifts many ships, not all of them. But we're not there yet. We're getting close. And so that's encouraging. I just feel that, it's going to take a little more time.
So essentially, it's market sentiment.
Yeah, I mean, sentiment really matters. If you look at the HUI, which is something that I look at frequently, as well as GDX, GDX has performed quite well here for part of the reason that Eric mentioned. If you look at the top three holdings in that, it's Barrick, it's Newmont, and it's Agnico, right? And that's 30.1% of GDX right now. So as those three companies go, it really matters to the ETF's performance. But the HUI, it has to hold 250 here, in my opinion, which it is. But we would like to see it at 275 plus, right? That would indicate that we're off to the races a little bit more. And 300 would be a better, target in our view.
Can you think of an example, perhaps even in your own portfolio, where there really is a big disparity between a stock's price and the value of its assets?
Yeah, I mean, we've talked about this once with you before. It's a really small company that many people don't follow. It has no analyst coverage. We love that. First Tellurium, it's FTEL in Canada, FSTTF in the States. They just announced 2 weeks ago that they're bringing in a $29 million US deal. At the time that deal was announced, their market cap was 5.6 million US. I mean, when you see that kind of a news item, you have to call the company and say, what's going on here, right? Because the news item actually didn't disclose that day what the JV looks like between the entity Resolve and First Tellurium. But when you saw the next press release, it actually said we're only giving up 15% of our thermoelectric device to get $29 million US. So, I mean, this is just one area of the company. This is more of a tech and a mining play, in my opinion. They still have projects in Colorado and in Canada. So there's a lot of ways to win with a stock like that, trading at 7 cents. I mean, it's like, I have no idea why it's trading here, but it takes a while for people to understand this news and what it means to a company sometimes.
Circling back to the first part of our conversation, we were talking about tier 1, tier 2, tier 3. Eric, I'm wondering, is there anything in your portfolio which you would say has a tier 1 project and is definitely currently undervalued looking at its share price?
I wouldn't say tier 1 project and is also very undervalued. It's like that's really hard to find. And a good example, I think, of at least what I see as a tier 2 project would be First Nordic Metals, who have a multi-million ounce gold deposit in Sweden, and it's very much a sleeper. I would say it's a company that is from the merger of two other companies in Sweden. It's like, we know Canadian investors, for example, tend to like Canada. They're Canada focused. So Canada gets typically a premium. And in the case of Sweden, it's like there's almost nobody that has any reference of investing in Sweden, especially in the North American market. So I think that's just a I mean, it basically touches on most of the. It basically checks most of the boxes we've talked about. I mean, it's a great jurisdiction, and on the cost front, I mean, they have hydropower nearby. Sweden is very, very famous for very low cost mining. We mine stuff underground that probably wouldn't work in most places in Canada, for example. That's partly because of the hydropower, and that Sweden produces 60% of the world's underground equipment. And then they also have a very, very large land package. So that's a case where I see it. I think they're cheap just based on their portion of the current Barsele deposit. I think it's cheap based on everything we know about their flagship project. Then they have the additional exploration potential, which, I mean, if they prove that this is more like a 5 to 8 million ounce gold camp, yes, then I think it's, one could say it has, tier one potential, it's a tier one project. So I think I'm paying for less than what it's worth of a tier two project, let's say, or what I think is going to be a tier two project. And then I get all the exploration potential for free. So I like to have the optionality of there being a tier one deposit, but I don't like to pay for it. And I mean, as a value investor, that's what you want.
Definitely. John, last word to you. Any last tip for investors looking at gold mining companies right now?
Sure. So just to echo what Eric said, we own First Nordic as well. In the States, it's FNMCF. And the reason is they came out with news this week talking about their exploration potential at Paulbakken, and they have 2.5 million ounces at Barsele. So as Eric said, like something like that can get much larger. It's led by a guy named Taj Singh, who Michael, you and I interviewed with June 7th, I believe. And Taj has tremendous success in the industry with Discovery Silver. So that's one of the things that we look for is, management that's been successful somewhere else, right? Whether they sell that company or not, it's like, how did you create that value for shareholders? Can you do it again in a jurisdiction like Sweden? As far as like other names, I would say, there's a lot of attractive gold and silver juniors right now. We like small producers that have the upside right now to the price of a move in silver or gold. So to us, that's like Guanajuato Silver, which is a deep value play. GSVRF. I met with James a few weeks ago. We had dinner. The stock was decimated at that time, and it was because they just did a financing, right? Capital raises are natural in junior mining. It happens regularly. And so if you're looking long term, you want to take advantage of those opportunities. It's just a blip longer term on the chart. But the stock is still very cheap here at under 19 cents US. I mean, they have 4 projects. I think there's going to be a lot of upside. They just put up a 1 million ounce quarter in silver. When I asked him what his thoughts were for production growth, he thinks he can grow production 20% plus over the course of the next 12 months. And that's pretty conservative, because I know James for a while, and he's not going to tell you exactly what he thinks. But I think, that one could have a lot of torque to the price of silver. And then Silver X for us has been something that we like as value investors because it's in Peru. Peru to us is a jurisdiction that, is on the upswing with Castillo out of the way 18 months ago. And I think Jose, Garcia is a really great leader. He does difficult things that need to be done to protect shareholders. Like last year, they really pulled back production in Peru, hurt the stock price, yes, but now they figured things out. They did a real nice capital raise in March, right before things took off here, and they're cashed up now for the whole year.
All right, fantastic. Thank you guys both for giving us a look into your portfolios, as well as for that masterclass in how to assess a stock. Really interesting. John, you also mentioned that conversation we had with Taj Singh, First Nordic. If you want to go watch that, check out Investor TV. We had a live panel discussion, really great insights there. So, gentlemen, thank you so much for joining us today.
Thanks, Michael.
Thank you, Michael.
We've been speaking with Fenwick Consulting Group President John Fenwick and the editor of the Hedgeless Horseman, Eric Wetterling. And you've been watching Global One Media's Stocks to Watch. I'm Michael Suardo.